The JSE and the Rand poised for a difficult day of trade this morning. The markets closing in the red yesterday. This is ahead of domestic consumer inflation data and led by losses in mining sector stocks. Independent markets analyst is Jimmy Moyaha. He joins us now for a quick markets update. Jimmy, good morning to you. I suspect you're also load shedding. I see a picture of you there on my right. Let's begin the conversation with that overview of how the markets are faring this morning ahead of the all-important inflation data that is expected out later this morning.
Good morning, Toli. Morning to the viewers. Yes, I am the victim of Eskom's stage 4 as well. So markets not necessarily responding to that. Markets opening in the green. The all shares up 0.33%. Resources leading the charge there, up actually more than 0.75% there. Industrials up 0.5%. The Rand is weakening. It's down about 0.5% against all the majors, sitting at about 20 Rand 37 against the euro, 18.66 against the dollar, and 23.38 against the pound. We're seeing that gold is still strengthening, holding above that $2,000 an ounce level off the back of that U.S. sentiment expectation. There's a lot of rhetoric that's going around about what the Fed will do next, how the Fed will handle the situation now that they see that their economy might be shaping up a bit differently. And that's giving a lot of market movements internationally, at least. On the local front, as you mentioned, we do have that CPI reading coming through, but we also have to contend with that interest rate announcement that will be coming through tomorrow as well. So today's CPI print is expected to, from a core CPI level, we're expecting that will come in at around 4.3%, so a little lower than the previous reading. We are expecting headline CPI to still remain a little high at about 5.5%. I don't know if that'll be high enough to warrant concern from the central bank at this stage with regards to that interest rate decision that we're going to get tomorrow. I think today's data would be quite important for tomorrow's decision as to whether or not we see another hike now, or a slowdown, or perhaps another hold. I think the consensus at the moment is that we're going to get a hold on that interest rate decision, but we'll keep an eye on that, and hopefully we don't see any more interest rate hikes.
Well, we're going to have to wait for the Reserve Bank governor at around 3 p.m. tomorrow on that. Let's then immediately launch into company news. RFG's annual results for the year, which ended 1 October 2023, they are out. And what's the sentiment there? What's driving market moves?
Good results from RFG. They increased their final dividend by 35%. The business's headline earnings was up by 35% as well, sitting at about 488 million there. Cash flows were up about almost 60% to just north of 1 billion rand, which is always positive, giving the business a bit of headroom in terms of any things that they have planned for or any unexpected things they need to contend with. We know that companies that have had these strong cash balances have been able to weather some difficult storms, and in some cases it's been the difference between the company staying alive and going through some really difficult times as a result of load shedding. I mean, Astral jumps to mind when I think of that. But the CEO of RFG saying that the revenues were up, the business is showing some steady growth and resilience despite the fact that inflation was, or their price inflation was at about 12.9%. Their revenues were still up about 8.7%. So a resilient set of numbers from them. Their international business was in the green as well, growing by more than 20%, and they're planning a capital investment of to the tune of about 280 million rand in the new financial year. So continuing to expand and grow their products, I think the meat products as well as their fruit products. So it'll be interesting to see alongside that how they are managing the electricity situation, because part of that capex will go to replacement generators as well as new generators.
Let's talk African Rainbow Capital Investments announcing a 750 million rand rights offer. Help us make sense of those developments.
Quite an interesting announcement by African Rainbow Capital. I mean, the business at the moment is trading at a fairly decent discount to the assets that are in that portfolio. It is quite an attractive business. I'm wondering, though, why it is that they've gone this route in terms of the rights offer. The business hasn't got concerning debt levels where you could say they couldn't raise this via debt, but I suppose from a strategic point of view, this might be there might be a reason behind why they've gone for the rights offer. It has been approved by the board in terms of the requisite requirements to go ahead and proceed with it. And it's an unrevocable or irrevocable rights offer, so that's quite an interesting caveat that they've thrown into the conditions around that. But again, the business is in a fairly strong financial position to have been able to raise these amounts via debt, but I suppose via rights offer means that it gives them a bit more flexibility from a shareholder perspective.
Let's conclude then with PPC, which is involved in restructuring its senior management following the sale of its Rwanda business. Talk us through those developments.
Yeah, so PPC announced that they are selling the 51% stake that they have in that Rwandan business, and alongside that, they've been restructuring their entire African operations. I mean, the Rwandan business is one of the last remaining assets that they had on the continent as part of that Africa expansion plan that didn't go as well as they thought it would. And the business has been going through some changes. We know that their outgoing CEO has already announced that he's not intending to renew his contract and would be leaving the PPC at the end of December anyway. And there was a replacement CEO that was announced. The replacement CEO is, of course, still awaiting a work permit. But the other changes that are happening alongside this Rwanda sale is that the MD of PPC South Africa and PPC Botswana is also going to be stepping down at the end of December. This marks, I think, Mr. Lugua has been there for about 30 years within the group, so this position is now not going to be filled. It's going to be absorbed into the CEO's position. So instead of having a group CEO or a CEO of other operations and then an MD of South Africa and Botswana, you're just going to have one consolidated CEO's position, which hopefully work permit permitting would be filled come January. So those changes just coming off the back of some restructuring to make the business leaner and focus on its core business units. I don't think the Rwandan business would be adversely affected. It would just come into the rest of the business and just not have two different leadership structures within the group.
Jimmy Moyaha is independent markets analyst. Thank you very much for that markets update.